Good afternoon, everyone, and welcome to the RealNext webinar series. I'm Jeff Finn, and I am delighted to be joined today by Marissa Limshako, uh, co-founder and president of Otso. Really delighted to have you with us today, Marissa. Marissa's been breaking barriers for years in her career, first in the military, graduating from West Point, leading soldiers in combat and doing great services for the country. Thank you very much. We, appreciate what you do and really respect what the work that you did overseas. But more recently, found yourself in the real estate industry, in the investment side, development, and now in what I think is a fantastic new program and product that you founded with your partner Josh Feinberg at Otso, which we want to talk about today. Otso has an incredible credit mitigation or risk mitigation program for tenant risk and putting a bond rated security behind the tenant to help them lower their cost and decrease their capital needs to put up for security, and giving landlords even more credit enhancement than they would typically get through a security. So Marissa, we want to hear about the program, the platform, what you've been doing. I'm sure the audience is really anxious to learn all about the ways that they can use this to facilitate transactions, enhance the value of their assets. And maybe just as we get started, if the audience could quickly just let us know a little bit about your background. Are you tenant rep? Are you leasing? Are you in investment sales? Because it works for due diligence on investment sales as well. And or are you owner operators of property? So we'll make sure we can address the audience in the best way possible. And during the session, Marissa's got great content to deliver, but I know she's anxious to hear your questions, and we'll be fielding them and presenting them throughout the session as appropriate or at the back end of the process. So why don't you chime in through the chat feature, and we'll take it from there. Marissa, I'll let you get going, and I'll give you sort of a profile of the audience as we get
Yeah, well, I
through the
look forward
process.
to hearing. I'm assuming most of y'all are in the brokerage world because of your association with RealNext. But Jeff, thank you so much for having me. I have a dog that I thought was in the office that I need to let in. Just 2 seconds, sorry.
No problem. So that'll give everyone a little bit more chance to respond to the profiling question. So it looks like
Uh,
we've got investment sales, we've got business
awesome.
brokerage as well as commercial leasing.
Okay.
Uh,
Great. That's
there's
really helpful to know. How do
Yeah, it
I
looks like a
start
good,
sharing my
pretty good mix across the board.
how would I start sharing my screen, Jeff? I think
So I should
do I
have
just
given you a handoff, and it should have
okay.
popped up on your side.
Can y'all see it now?
I don't know
See.
what happened, but I gave you the share, and now you're gone. That's strange.
That's weird. Well, while we're figuring that out, if we can't figure it out, I can also certainly, move forward without the slides and share with the group. But really quick, first, thanks to RealNext and Jeff for having me today. The agenda for this webinar, I want to keep it informal because I actually really like it to be engaging and interactive with the folks on the call who may have some questions. But what I'll do is I'll start out a little bit about me, and Jeff mentioned my military background. I want to talk through some of like the economic trends that we're seeing from our perspective, and our customers and the tenants that are in their space. And then I'll go into just kind of like more into deep dive of what Otso is, and go into deal by deal. And again, if you have a deal example that you wanna talk through, I'm happy to talk through that. I'll do it by deal example, and then up from like a portfolio asset kind of view as well for those that are more on those levels. So quickly on me, I've been in commercial real estate for over 10 years now. As Jeff mentioned, in the finance, technology, and investment spaces. Went to West Point undergrad, and so I got my Iraq T-shirt as Jeff mentioned as well. And this is now my fourth business, third in the industry. And so I've done things from technology all the way to brokerage, and then now more on the technology side of commercial real estate. So Well, us really quick on the market and what we're seeing, with the economy and the impact on commercial real estate. And I start with this because it's kind of like leads into what we do with Otso. But as all of you hopefully know, there is this inflation and interest rate rise right now in the economy that is causing higher cost of capital pressures, lender underwrite leading to pressures in lender underwriting. There's some cooling in the climate, which is pretty crazy as opposed to, even like a year ago. I think from an asset class standpoint, industrial is strong with some headwinds. I mean, you do have it's market based. I think there's still a lot of building and there's still a lot of growth, but there's some kind of headwinds. You mean when you see like Amazon subleasing 10 million square feet of space in some markets. I don't know if y'all heard about that. Office and retail are still the story. I think the story is still being told from a perspective of recovering from the pandemic. There's a lot of uh, questions still with how businesses are approaching office work, like working in the office and managing their teams within an office environment. And retail economy, there's still a lot going on with re, reimagining of what they're going to do with malls, and it's also very market dependent. Some markets are growing a lot, and some are still pretty stagnant. So just a lot of uncertainty, and then you throw into the mix like these interest rates and the inflation and the overall capital and debt status of the industry is definitely different from just a year ago. However, with uncertainty, I have a quote on this slide,
Might want
and
to try. There should be,
yeah.
if you have your slide deck, you should have a prompt on your side. He just said, just accept. I don't know if you have two
Okay,
screens going,
let
but if you
me
just
see
accept, then you'll
here
have
if I
controls over
can't.
there.
All right, let me see if I can't do that now. I think that's the sharing show. Let's try this now. Huh, still not showing anything. Um, hmm, not. I pressed play, Jeff, and it's still not. It just says not showing anything on
It
my
just says
end.
waiting for you to present.
Let's
Okay, well,
see.
if you want to send me a
That's
link, I can
fine.
bring it up, or if you think if you just can go without, we're good. We'll.
I could just keep on going
All
without,
right,
and then I
perfect. Sorry to
could,
interrupt.
no worries. Yeah, yeah, no worries. And so, with all the uncertainty of the current economy and the situation, there's a lot of questions about, commercial real estate, and where certain things are going to be headed. And I have this quote on this one slide that you can't see, but it says, "The beauty of uncertainty is infinite possibility." And with Otso, what we've brought to the industry, or what we're bringing to the industry, is really a new standard to tenant risk management, as Jeff briefly mentioned in the beginning. So we offer automated underwriting of tenants, continuous monitoring while they're performing in their lease. And really our core product is additional lease protection with a surety bond that serves as an alternative to traditional cash deposits and letters of credit. So why did we start this company? I always like to tell kind of that story. And it really was from when you start a company, it's usually from your own challenges. And my co-founders and I, as property owners and investors in commercial real estate, and we're talking, Class B assets in North Houston, Class B, if I guess if we're generous. But there's three challenges that we had that I'm sure all of you, not most of you on this call, can relate to. Number one, it was underwriting tenants, especially non-credit small business tenants, which is the majority of the tenants in our assets, is extremely challenging. And there's some that just don't have any history. So that whole challenge was always really frustrating to us, is the underwriting of tenants. Number two, it was the gap between what we would collect in collateral, usually a 1 to 2 month deposit in our market. It's various, that's various in other markets, but what we would collect compared to the deal costs was really, really like uncomfortable exposure in some deals, but there always was that exposure. So number two was that gap between our deal costs and what we would collect in collateral in case the tenant defaulted. And then number three, and we have a lot of our customers who were asking about this, which is why we built the solution. There's no way to really know. There's not a lot of good efficient tools for monitoring tenants post lease. So while they're in the lease, I mean, typically us as owners are the last to know when a tenant is going to default because they stopped paying us or they did a midnight dash. And so there is no solution for that either. So those three challenges were why we started the company, and really started with solving those first two challenges in creating an automated underwriting solution that underwrites tenant businesses, especially small businesses. And then we paired that with our surety bond product that closes that gap. And so our average customer is gaining 300 to 400% more protection in every deal. So if I were to give you an example, there's a deal in North Houston, and it's a 5,000 square foot retail space, second generation, and the rent for that was $12,000 per month. Now, the deal costs that the owner had to put in the deal, between deal costs, we're talking commission and build out, that was over $100,000, so like $118,000 to get the space ready for the tenant. However, the securitization, what that customer collected from the tenant was only $12,000. It was a 1 month rent in that market. And so, as you can imagine, if the tenant were to default, the owners in that case would have been out $100,000. And so they leveraged Otso, our program, in that deal, and they actually leverage us in every deal and across all their properties. And what we do is we simply go in and instead of asking for $12,000, they ask the tenant to apply for, in this particular deal, $100,000. And so the tenant applied through us. That's where our automated underwriting comes about. And instead of locking up the $12,000, the tenant was approved. And instead of locking up the $12,000, the owner was like, instead of locking this up, why don't we just add $500 more to rent? Because that was the cost of the policy. And so the tenant gladly signed that lease with that structure where they didn't lock up the 12,000, but they had the 100,000 multi-year bond in place of that. That cost them $500 extra per month. So the owner just passed that down to the tenant in rent. So the final numbers coming out of it was the tenant's rent was $12,500. But if they were to default, remember I said that the owner put down $118,000 to get the space leased. So we had that bond for $100,000. So in the case that the owner, the tenant were to default, that owner was covered, 3 to 4 times more than they would if they only just held that $12,000 with that traditional cash deposit. So that's how we played in that deal example. But the process for us is pretty simple. It's the tenant applies, the owner tells the tenant how much to apply for. We make the decision, and with the decision, we actually provide a financial report. With the report and the decision, they work that into the deal. And then with the deal, the bond is simply an addendum to the lease agreement itself, and we cover every instance of default in that lease. And so if you're wondering how much does it cost, we are anywhere between 5 to 7% of the amount of the policy. So 5%, so for every $100,000, for example, it's like around $500 a month. And you can burn that down. You can keep it in place the entire, just like you would a traditional deposit, and that's throughout the lease. There's that protection. Any questions on that, or Jeff, did you want to add
So do you
anything?
typically come in at the back end at sort of the deal time once a tenant's in hand in negotiation, or is it a standing program that a landlord would put in place to say, this is how we're going to market, and to bring their leasing agents into a program and a process to know that we're just going to offer this when you're going out with your tenants so they can apply for it? What's the best practice there?
Yeah, the best practice that we're seeing is the latter. The landlord is adopting us as a program, but however, they don't have to use us in every deal where we're an option, like a tool in their toolbox. But the best practice that we're seeing with our customers is that, across every deal, they're gaining more protection and leveraging us. So they've decided to leverage us in every deal. And so they'll, brief up their leasing teams and property managers on this. Some even will advertise and are successful in advertising their listings deposit free. Not all of them do deposit free. Some of them will still collect. It just depends on the deal dynamics, but some of them will still collect, a little bit of cash, and blend it in with our bonds. So they still have, that additional protection.
So you can do both. You can work side by side with a letter of credit or a security deposit, where it would just be the additional coverage, perhaps, that would be coming in through the Otso program.
Correct. The majority of them do us as a replacement, but we do have some customers that are, again, it's deal dependent, right, and tenant dependent. And so, yeah, some of them will still feel more comfortable having a little bit of that cash and then just using us as a supplement to gaining
But
more.
it's really important, it seems to me, where certain tenants just don't want to put 20, 50, $100,000 out of work,
No.
right? They want to put their money to work. And even though there's the cost of in the rent, it's spread out over time, so they're able to keep their capital and put it to a higher value uh, return coming into their business.
100%. Yeah. I mean, and with the lead in with the conversation around the economy and how it's impacting commercial real estate, it's obviously impacting businesses as well. And, whereas it's a no-brainer for a business to not want to lock up that capital. And I've sat on both sides. I've been in the business leasing space, and, locking up 40, 60 grand is a heartache. But especially now, especially for any of the tenant reps out there, I mean, every deal kind of has that friction point around financials and around how much a tenant's going to deposit. Usually that's what TBD on the LOI, right? And so this also, we have a number of tenant reps that are excited to use our program in their deals because they're obviously saving their clients from locking up that capital.
So in some cases, if it's sort of structured in place with the landlord, then that would be uh, a level of communication that has to go, and the tenant applies and comes in. If the tenant's bringing it to the landlord, does that become more complicated? That do you have, is there a different level of
Yeah.
education?
So for any
What would be
tenant
sort of the
reps on
workflow that
there,
you would? Yeah.
it certainly is easier to bring the landlord on first, right? Like it's and that's strategically our go-to market. We're a landlord product, and so that's the end of the pipeline that we focus on from a sales perspective. But we do have had tenant reps come to us to want to leverage this in the deal, and when they do so, we tell them, you're going to have to probably um, uh, educate the
Educate the
landlord,
landlord. Yeah.
yeah,
And you
on
help
this.
with
We
that, I'm sure.
provide.
You've got all the
We have
collateral.
a lot of collateral. We've jumped on calls, as well. We're happy to do that. However, what we find from a tenant rep perspective, for those of y'all are on tenant reps on this call, is to come with a little bit more. So if the landlord's asking you to lock up $50,000, we always say, okay, they don't know about what this program is, right? And uh, what we'd recommend is have the tenant apply for maybe 75 to $100,000 instead of that 50. And how we've seen it most successful is those tenant reps that are like, okay, landlord, my client was willing to lock up the $50,000, but we got them approved for $100,000 leveraging this bond.
So
We'd obviously
you
prefer to use this. So it gives the landlord incentive, like they're actually coming back with some more value to me. And it disarms them to want to consider a new solution.
would
And
you
the
be able to deliver something with the letter or the proposal saying, um, in lieu of a letter of credit, we already have a triple or an A-rated bond for $100,000 that will be our letter of credit, so to speak, and that we'll use that in lieu of.
Correct. Yeah, correct. Where I've seen it the most successful from a tenant rep standpoint is when they come in like as early as possible, they kind of have an idea of what the landlord is going to ask. So they get their client, their tenant pre-approved with us. And so they have the decision, and then they have on top of that, again, I mentioned we give a financial report. And so they're also providing the landlord already here. Oh, by the way, we've already got this financial report for you to look at. They're already approved for this much. You're gaining more protection. Use this. We want to use this in our deal.
So there's no cost to the tenant at that stage. They're getting pre-approved by you.
No cost, no
Yeah.
cost for the
So
pre-approval at
you're
all.
going to give
Yeah.
them a package that says, okay, uh, Otso, I'm coming in as a tenant. I've got 3 years of history. I've never defaulted on anything. I pay my bills on time. You've got, you draw from. Tell me about what do you draw from, and what do you consolidate? What does that package look
Yeah,
like?
that's a great question. So we obviously, from an underwriting perspective, we knew. I mean, as most of us know on this call, and this is actually why my business is here, is there's not a lot of information that tells the true picture of a business with just the credit, right? That doesn't really tell you a good picture of the business. So what we end up doing is we actually log in and leverage their bank account. And so on our application, we actually have them log. Part of the process is we have them log in, and we're able to look at their banking history and how they've managed their money for the last 2 years. And we take pieces of that analysis, and parts of that are on the financial report that we provide landlords. And I'm more than happy to send a template of what that looks like to anyone on the call that's interested.
I
But
want to
most
talk
of
more about that because I think there's other applications for that, but there's a few questions that have come in I want to get to before we
Yeah,
try to
yeah,
jump ahead.
absolutely. And
So
and then
one
one
is,
more thing for the tenant reps on the call, another thing that I've seen them do is actually, yeah, all you have is time as a broker, right? And so there's some of those clients that might come in that you're not 100% sure of. I mean, these are obviously the smaller businesses, of their financial standing, and so they actually have leveraged us to vet some of their clients in our in leveraging our pre-approval as well.
interesting. It's sort of a proof of funds that you'd have with an investor. Now you have it with your tenant to make sure they're worth
Yeah,
working
like
with.
just like when you're buying a house, right? Like you get pre-approved in the beginning, and then you bring that letter when you want to buy the house. It's a very similar concept.
So the first question was on that. Uh, is this just for small tenants? How big is too big? What sort of sweet spot for you? I know you've got some things that is up to a limit, but then there's another process for some larger transactions. So if you could explain that
Yeah,
profile.
that's a great question. So we do anything from $2,000 all the way to 5 million. So when we came to market, we obviously started with the smaller deals, but over the years have definitely grown in demand. And so there is our sweet spot is like up to $100,000 is the majority of it, but we're starting to get a lot more demand for over 100,000, $300,000 to $500,000 are actually in the last couple months has been very, very common for us to see. But from a process standpoint, when those numbers are bigger, we obviously have to look a little closer. So anything up to $250,000, we automate, and we can turn that decision around really fast. Anything above that, we have to put a human on because those are bigger numbers. And so we still turn around within a couple days our decision, but there's a little bit more digging and requirements for looking at those deals that are over half a quarter million.
And there's a question that asked about the rates and do they vary based on the tenant risk and based on what you just said, do they also change or modify based on the size? Or is it that 5 or 6% sort of, is that a good rule of thumb across the board?
That's our average is the 5 to 7%, and that's a great question. That really varies to how we underwrite the tenant and like where they land, from our analysis and underwriting them. And so from a size standpoint, it doesn't vary. It's really just like the strength of the financials of that business. But yeah, some of them that have less history, and so maybe like to 8 to 9%, which we've looked at, but the average really is falling in between 5 to 7.
And I know that this makes so much sense on the leasing side, but
It does.
I guess a side benefit has been due diligence on an acquisition where someone's underwriting a lease portfolio, and you really want to get to understand what's the likelihood of these people paying, if they're, do they have enough security in place?
Yeah.
How can you play into that decision process?
Yeah, that's great. And so, the bond that I'm describing and I've been talking about is where we really started the business. But what's evolved in the last 3, 4 years is, we've really come to be known as the tenant experts in the industry. And as I mentioned earlier, it's that our customers and ourselves always that challenge of like, what is really the true risk and post lease, and like how are they doing? And so now we've actually developed another program that this is all actually pretty comprehensive, and I'll bring it together here at the end, how both programs work together. But aside from our bond program, we have what's called our Guardian program. And what we've essentially are able to do is take a tenant, think of like a Carfax, but for tenant risk. And so we have access to data and have been able to put together a proprietary scoring to score tenant risk. And this is from anything as small as small businesses as high as, Fortune 100 companies. And we're able to tell you, we pull from over 15,000 sources, and we're able to digest and provide like a comprehensive overview of from the individual tenant's risk score all the way up to how all of the tenants in a property, amount to a risk score at an asset level, all the way up to a portfolio's risk score. And the components that we bring in our analysis and these scores is everything from credit to payment times, from terms. Are they paying their bills on time? That's always good to know, right? Derogatory filings. So are there any liens? Are there any court filings that you need to know about? Is there a bankruptcy? And if there's a bankruptcy, that's actually a real-time alert to someone's cell phone that we provide our customers. But Jeff, what we've found, coming back to your question and acquiring assets and even like managing them, and we've brought on some even lender customers for this program, is the ability to look at a rent roll and from our analysis of the risk, be able to kind of get a feeling, not even a feeling, actual data to show the probability of renewals or potential probability of default for the tenants on that rent roll. And so we have scoring that we can do across a whole, from a portfolio down to a single tenant. And we also have alerts, so real-time alerts that are sent monthly to notify you of any changes in credit, payment, derogatory, anything that any of those types of changes you would get monthly. And asset managers, lenders, investors, kind of growing from our kind of like basic owners that we were working with before, are really gravitating towards this program, especially again with the current state of the industry, because they're now able to get a true kind of assessment of the risk of that asset overall. It is kind of when you really think about it, it is kind of silly that we're in 2022 and trillion-dollar industry, and millions and millions of dollars go into investment into these assets, and there's not really like a true kind of pulse on the income stream of that asset, which is obviously rent, which is the tenants. And so now we're able to provide this comprehensive package to our customers, in which, from a standpoint of acquisition, they're able to know, what the risk profile is. We even have like a Moody's equivalent rating. Is it A minus? Is it B plus? With the tenant risk in that asset. They acquire the asset, and we then do what's called a securitization analysis to show them their exposure across every deal in default. And then that's where our bond comes in, because we're able to recommend, like, you've got $300,000 worth of exposure if these tenants were to default. Here are ways that you can close that gap and leverage our bond to gain protection. And then, the ongoing monitoring, as they're managing the asset is very, very valuable to them as well.
This is just incredible. It occurs to me, and I don't know if you've been through a long enough cycle to have seen it or not, but it seems logical to think that if this program were in place across the full rent roll, you would change a 6 cap to a 5.9 or 5.8 or something. There's got to be some movement there if you're enhancing the credit across that, or if you buy an asset, and this is something we hadn't talked so much about. You've got a tenant midterm. They might have you might go to them and say, you know what, you've got $100,000 sitting in my bank account earning no interest and doing no work. Why don't I release that money to you and swap it out for a bond?
Yep.
Is that a possibility?
Yep.
Midterm in a lease?
Oh, yeah, that's actually a recommendation we recently made to a customer in doing their analysis. Is they've got 4 tenants that are within 24 months or less, of lease expiration. We looked at the 2 tenants the risk scores for all 4, and 2 of them were like, you should incentivize them for early renewal by returning what you have on hand, but in exchange, having them apply for more than you have on hand.
So even better, you get them to do a 5-year lease on top of to do a new.
Exactly. And so they're happy because they've got their money back in their account, right? You return their money, but you've gained more protection and, most importantly, more term. And they're a good performing tenant. Now, I mentioned there was 4 tenants that we looked at. 2 of the tenants looked great, and we recommended them as, incentivize them early renewals. The other 2 tenants, one was kind of in your moderately risk standpoint. They're slowing down on paying their bills in the last 6 months. And so we were like, okay, like, these tenants are up for renewal. You can think to renew them, but we're seeing these kind of trends with them. So maybe, there's something that you maybe reconsider about renewal and maybe find a better tenant to take over that space, because there's a risk to default, or this one's maybe going downward. Those are just recommendations that we provide for them, but absolutely we're used to leverage to incentivize renewals, and swapping that deposit by gaining more protection through the bond.
Excellent. And so I think it probably was answered, but just a question came in on it. Would this typically release the personal guarantee if there was one? Or do you?
Yes.
Yeah.
Yes, this could replace the personal guarantee. It's totally up to how it's negotiated. They can add it as a supplement or completely replace the personal guarantee. And one other thing is when the building is sold, all of this is transferable to the next owner. And when you have more protection on the books, that transfers over as well. So
the personal guarantee concept, you would actually be able to underwrite a policy that guaranteed rent, not just a security deposit.
It's anything. It's the rent, but it's also, we like to recommend, we can cover up to 9 months of rent, and so 6 to 9 months of rent. So we always tell them. Yeah, like, and I see where you're going with this, Jeff. That's a great question, because in some cases people are probably like, why don't they just do a bond for, like, the lease itself
No,
or
exactly. Yeah,
but the problem, the challenge around that is getting the tenant to want to pay for that
it's just too
in the
much.
monthly
But
rent.
if they're got
Um,
a personal guarantee on it, and that's there's a risk and a cost to it. Just what is trying to see how that would be underwritten and what it would cost to at least know that it would be possible. But you're saying that's the option is up to nine months.
yes, yes. Was that the question? Was that the last question?
The last question was on the personal guarantee. Yeah, and then
Okay.
another one that came to mind when you were talking about the profiling of the asset by the tenant mix. Are you doing it by industry or just by the specifics of that individual company? So do you look at credit risk of like
We look
when
at
we're going
both.
through the yeah.
Yeah, we actually look at both. We look at that individual entity and how it's performing, but we do compare it to the industry standards. So one of the metrics that we share with our customers is this tenant is paying slower than the rest of than the rest of its industry, or it's paying faster, compared to others in its industry. So we do a comparative industry analysis as well in our evaluation.
Excellent. So I think we've covered the questions.
Great. Trying to see if my screen share it's not working.
What
Uh,
I'm going to suggest is that we, if you could send me the deck, we'll send out a recording to the audience, and if we can add the deck and maybe a sample report,
yeah,
I think that
yeah,
would
I'll
be
do
really
that.
helpful for
That will
everyone.
be great for sure. I apologize. Jeff and I probably had the opportunity while we were catching up on life before before everyone came on. I
No,
should
it
have
always works.
tested
Something
this
happened.
out.
That link just got lost you're in transfer
Yeah,
somehow. But I
yeah,
think
no
this
worries.
is an outstanding program. I know based on the questions and there's a number of people saying to send information right away. They've got some opportunities to look at. So it's a timely, beneficial, and uh, I think a value add new program to bring to clients. One of the things, Marissa, and I think that the bulk of the audience is on the brokerage side. What we've worked out with Otso is a revenue sharing program for the agents to bring this in. So not
Right.
only is it a great program for the tenant to not lose capital and keep their capital working for them, for the landlord to get more credit enhancement and risk mitigation, and it's also a new revenue stream for agents. And so
It
there's
is.
a percentage. I think it's 10% of the Otso fee, not the insurance policy, but the Otso component of
Yeah,
it.
it's
And you
our
want to
net
describe how
recurring.
that models out?
Yeah, thank you for bringing that up. Yes, I was not a broker, but my co-founder was a broker. And when we were thinking of, we work with a lot of brokers to sell the product and, to help in their deals. And one thing Josh always used to say is like, it would have been great to have a recurring revenue stream as a broker. And so when we do have a profit sharing program for every deal that you bring us, any deal, like you bring us a deal, all of the other deals on that property or for that specific customer that are brought on, we share our profits. So it's not just that one deal that you get. It's any other deals that that customer ends up doing with us is a potential shared profit that we like to share with our partners, such as yourselves. And it's great because it's like, these leases are 3 to 7 years. And so you've got that kind of income coming in as a potential recurring revenue stream year by year as you do more deals with us.
Excellent. And I don't know if this applies or not, but there was a question saying that I think they really love the concept of the tenant profiling and rating. Are you able to rate the landlord as well in any? Because I don't know if you get the same. It's not the same underwriting metrics. So I don't think it applies, but that was the question. So trying to think of
Wow,
it, is
that
there a
I
way to
haven't
turn it
gone. That
around?
was who asked that one. That's a good one. If it's an entity, we can do it. But yeah, from a standpoint of a portfolio, like the assets itself in a portfolio, we are scoring like aggregates all of that under a single portfolio. But we have never been asked to underwrite an owner. I'm assuming if you are underwriting an owner, you want to know, the value or maybe the risk of their portfolio. So that's how we would
Yeah,
approach that. I don't know if that answered the
I don't know.
question.
It seems like it's a different orientation, and I think it's a good idea to say that certain landlords, if you're a tenant rep, you're saying you may want this building may have a lower lease costs, but you're not going to get the same level of service from the landlord. They're not, the landlord could have
Oh, I
credit
see.
risk. They have a mortgage coming due next year. It's going to pop from 3% to 6%. There's issues with their capital structure. I mean, there's a whole other world of challenges that I think go into
Oh,
profiling the landlord and why you may or may not
I
want to go into one
see.
building versus another. And I think
Having
that's
like a
part
Yelp
of the
for
value of the
buildings
broker.
is sounds like a Yelp for properties.
Yeah.
Which yeah,
I'm
I
getting some
tried to
feedback
solve
from
that problem
your
with
mic
them.
now, so
Oh, you are.
concerned with that. Yeah, yeah.
Fix that.
Well, you just have a few more minutes. If there's other questions, you want to bring them in before we wrap up. Um, we will be redistributing this to everyone. So if you want to share it with your colleagues and friends and have interest. So Marissa, what's the way to get started? How do you advance? Should I think we've put a landing page up. We'll send a link out
Yep,
on that. Is it just coming through the lead form on that? Is that the best
for
thing to do? What
sure.
information you need? What should they be?
Can you hear me again?
Yeah,
Okay.
you're perfect. Yeah,
Okay.
yeah.
Okay. So ways to get started. If you're a tenant rep and you have a deal, feel free to have them get them pre-approved. What I'll include and what I'll send out to you is a pre-approval link. You can be that's from a tenant rep standpoint, you get them pre-approved. You're also open to chat with us first about the deal if you want to learn more. For those on like the brokers on the ownership side, if you're more on like investor side of things, I'll also include information for you to where we do complimentary reports on some properties. So if you're more on the asset management acquisitions side of things, we sign an NDA and are happy to do a complimentary report on one of your properties, looking at their securitization and recommendations around where you can leverage our bond. But also happy to chat with someone on my team to talk you through the deal. We're all deal makers on my team. We love talking about deals. So please do reach out. But I'll have all that information for y'all to be able to apply or submit your properties for a report in the follow-up.
Excellent. So any closing comments other than that? I think you covered it perfectly, even without the deck. Sorry for the
Yeah, I apologize everyone for not having the slide deck. I'll send that to you afterwards. But no, thank you so much, Jeff, for having me. We're really excited about what we're building, and it's certainly been taken in directions that I didn't anticipate 4 years ago. But I think this is a very timely solution, and it's certainly offering a new approach to doing some foundational things from leases to even evaluating properties. But we do feel like we're here to set owners up for success and businesses up for success. And so please get in touch if there's any way we can help.
I would say that I had the pleasure of walking around ICSC with Marissa and Josh, and we've been on some other presentations together with clients, and the level of attention and responsiveness and interest from clients was incredible. So I think you're going to find that your clients are going to be very interested, and they're going to thank you for bringing something new, unique, and value add to them, help them just be more competitive in the market, find out ways that they can provide enhanced value if they're a landlord to their tenants, and to make better deals, enhance the value of their assets. So I would encourage you to give it a try, talk to your landlords about it. We'll give you information that you can use to make the introduction, so you'll be educated and make it easy for you to inform them and create even an introductory letter and create the awareness, and then to be available for any follow-up support that you need. So thanks, Marissa. Thanks everyone for joining us
Jeff.
today.
And thank
We
you
look
for those
forward to following up.
questions.
Yeah, you
Thanks,
bet.
everyone.
Bye-bye.
Bye.